Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk. And Brian, looks like the Nasdaq-100 giving up a little bit of those gains along with the rest of the market today, but although it might not seem like it, stocks can't go up every day.
Hi, Jill. Thanks for having me back on. And yeah, we're down a little bit today. As you noted, we can't go up every day. We made the high for the week back on Monday, and I think that measured 63% off the March low. So it's really just been a straight line up from the bottom. We've had very little corrective price action for the Nasdaq-100. It's been a little bit of some sideways price action, but nothing of any substantial size on the pullback front. You know, when we say securities or indices consolidate, they either do sideways through time to work off overbought technicals, or they pull back in price, which can tend to work that off quicker. The Nasdaq-100 has, I would say, characterized as been working its overbought technicals, working those off through sideways price action. So very, very bullish constructive price action. Since Monday's high, it seems we've been doing the same thing. So we had, a relatively minor pullback off the highs, but nothing dramatic at all.
All right, let's take a look at your first chart here of the daily on the Nasdaq-100 to see what the technicals are telling us, if we can see if this might be a near-term pullback, if there's some room to move lower. What are the technicals telling you on the daily?
Yeah, so on the daily, the arrow in the main part of the chart, the price part, is highlighting Monday's candlestick, which we can see is a large red candlestick. It did make a new all-time high on Monday, which it also did on Friday and on Thursday. But Monday we opened up, we gapped higher, and then went marginally higher from there, which is a thin line, and then quickly reversed lower and closed at the low of the session. We did have an up day the following 2 days, but we're down again today. But Monday's candlestick stands out. It's a pretty large red candlestick. It formed what we call a bearish engulfing pattern, which I wouldn't say was confirmed with the next day's price action. It did gap lower on the open on Tuesday, but Tuesday did finish back up in the green. So it just is a potential that we have a near-term top maybe for the next few weeks, where we see a potentially larger pullback. If we get below Tuesday's low, which let me put my mouse over there, is about 10,370, then maybe what I would say is it looks like we're going to have a more significant kind of pullback. If you look in the bottom panel, the RSI, it did not make a higher high versus what we did back in early June. Early June we hit 74, which is overbought levels, and now what we're seeing is that as price made a new high this week on Monday, the RSI peaked around like 71 or so. So there is a bearish divergence. Again, it's only the daily period chart, so it's nothing major. Could just suggest that we're due for a bit of a pullback here, and maybe to that prior high, which would be down around the 10,155, which would just be a few percentage points from where we are right here. Again, it's a daily time period, so I wouldn't put too much weight about anything too concerning right here.
All right, well, Brian, let's take a look at the weekly and see if you can get any more out of that.
Yeah, so on the weekly, it'll be very interesting to see how we finish today. So I don't want to jump the gun here, but at Tuesday's low, this weekly candlestick was below the entire range for the prior week. So there was your bearish engulfing on the weekly time frame. The weekly time frame is certainly more significant. We did rally back the last couple of days, and so at the moment, the way this candlestick looks right here, there's nothing too bearish about this. But let's see how tomorrow finishes out. And if we have a move to the downside tomorrow, it could certainly put a more significant bearish pattern here on the weekly candlestick. So it just remains to be seen how that's going to play out from a price perspective or price pattern perspective. But if we look at momentum, we can see that the weekly momentum is just about at that 70 level. It dipped above it and back below it over the last couple of weeks. And which is in and of itself, a bullish signal. It just may suggest that there's a near-term corrective price action that's due, but definitely below where it was back in February. When February we formed a double top pattern on the RSI, which is not just a pattern that we see in price action, but you can see the same types of topping and bottoming patterns in your momentum readings like RSI. And so we have a bearish divergence on that front. So, there's, a couple of things there to keep an eye out for. I don't think we'll have a great read on this maybe until the end of next week. Again, tomorrow we'll see the finish of this week's price pattern. Next week, we'll get some confirmation if it does turn out to be bearish this week. And so overall, my take is that we're still kind of in limbo here as far as calling a potential, intermediate turn top. When we do have one, I would expect potentially a retest of what we hit back in February, which would be the 9,400 level, which, would not be insignificant. That measuring from last sale would be about another 8 or 9% from here. So that would be a relatively healthy pullback. Again, those prior highs, prior resistance, we then would expect to act as support. When we have been seeing these non-growth groups as of late, Jill, as you mentioned earlier when we were speaking offline, the financials and things like that, energy stocks have been bouncing back this past week. Materials are up 6%, financial 6%, energy up 7%. So we are seeing some improving price action in those previously underperforming groups. Materials, by the way, is actually pretty close to making a new all-time high. If we do see that take place, I think the S&P 500 Materials Index is within about 4% of its prior all-time highs from 2018. That to me would be really nice confirmation as to what the Nasdaq-100 has been showing us. Nasdaq-100, as we know, has been breaking out to new highs, running strong, and a lot of people are saying, well, it's the tech sector. It's not a good barometer of the entire economy. Well, if we see materials break out to new all-time highs, that would give me, a good feeling that we're really going to see an expansion in breadth and these other sectors like financials, the industrials, the utilities as well. That's been underperforming. Those could really bounce back as well.
Yeah, and you could certainly see that happening as people are continuing to look for income and yield. And Brian, we have just another minute to go here. Walk us through your last chart, taking a look at breadth on the Nasdaq-100.
Yeah, and so, the breadth we have been noting that, relative to the March lows, the breadth has been expanding, and each week, almost every week, we're seeing a greater number of companies making 52-week highs. We are still, however, below those levels that we reached back in January and February, where 31% of the index was making new highs. We've topped out last week with about 27% of the index making new 52-week highs. So, that's a potential bearish divergence there. Also, the number of stocks above the 200-day moving average, which is the yellow line in the lower panel, we have about 82%, and that number, was higher in early June, and it was higher back in February as well. So a minor bearish divergence there. Again, overall, this group has performed well. Price is king. And price is just, a few percentage points off highs. But, we are seeing some minor bearish divergence in the breadth as well. Again, these are potential signs of a pullback, which again, given their strong, robust move from the March lows, would not be unexpected, and it seems like everyone's looking for a level to get back in and put some more cash to work.
All right, Brian, great stuff as always. Thanks so much for joining me on Trade Talks.
All right, Jill, thank you.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.